Good morning, good afternoon, good evening, traders from across the globe, and welcome to Short-Term Trading Live with Oscar's 777th YouTube video. Traders, in this show, as you know, we teach you techniques that will help you in short and long-term trading, but we like to be short-term traders. They will help you to analyze charts, and that in turn should make you a better trader. I am Oscar Carboni. I've come out of the pits on Wall Street. I spent most of my adult life down there, and I've come out of the pits to teach you the tips, tricks, and techniques that have helped me get to where I'm at today. And traders, they're quite professional, and they help a lot, so pay attention to what's coming next. As we know, futures trading is extremely risky and can cause substantial financial loss. If you do not have risk capital to lose, if you do not understand this game, if you do not place your stops first, I'd advise you to get up and run right now and don't watch the rest of this show because I don't want you trading. For you omniacs out there and traders that do understand the risks and use stops, rock and roll, baby. Here we go tonight. You got to see what's on the board. I have a red and green Omni. Confused, right? I'll explain it to you. It's not so confusing. This video is being filmed on Sunday night for trading Sunday through Monday. That's September 26, 2011. What do we have on the board? In the EMini SP, the ESZ11, if you will, there's a big bear flag, which we are now below, and anybody with a set of eyes and a chart can see that, so no news there, right? Below the big bear flag, what will happen next? Traders, that's where the green arrow comes from. There is a repetitive pattern that has been happening over and over again for the last month in the EMini SP, and I can't avoid looking at it. In fact, I think we need to get out of its way. So what are the two arrows for? I think we sell the first rally tonight in the S&P, let it come off, take our profits, and then get out of the market's way in case the repetitive pattern takes over. Now, in my view, the analysis is always greater, or you would choose the analysis or the Omni, if you will, over a repetitive pattern. Why? Repetitive patterns come and go. You'll get a repetitive pattern that'll work for a while and disappear, and you may never see it again. But the analysis never stops working. It's always there. So if you have to choose, what should you do? Take the analysis over the repetitive pattern. I would say take the analysis over the repetitive pattern. But if you have a choice to do both, go with the analysis first, take the first trade you can get out of it, and then expect the repetitive pattern to take over. And the best thing you can do, really, because we're in a big bear flag, is go with the short, get out when you can, and don't try to get long in case the repetitive pattern doesn't repeat for a fifth time. Now, what am I talking about? Have I confused you? I don't think you'll be confused, traders, because what's coming next will clear that up for you. With no further ado, let's go look at some charts. Okay, traders, the first chart you were looking at this evening is the EMini SP, the ESZ11, if you will, and it's the daily bar chart. As you can see, we are clearly below a big bear flag. We've been monitoring this and using this in our videos and using it to trade for days and weeks on end. And we have finally broken down below it. And traders, you can draw it any way you want. You can take these two lows and draw it here. You can leave that line there. No matter how you slice this flag up, it was a flag, we started breaking down below it, it's doing what it should do, and the end result of a bear flag is usually bearish, and I think that's what's happening here. But I'm going to show you something interesting now, what has happened inside of this bear flag. I'm going to take this portion of the chart and blow it up right now and show you a repetitive pattern that tells me to tell you, Monday, if you are short, you got to be out quick Sunday night into Monday, and then watch for the upside, and here is why. Traders, look at this chart. This is inside of that flag. There's no difference here. I've only blown it up. But here's what I've noticed. From the bottom of the flag, you know, if you connected your lines, it would be right here. We rallied up, put in a little high, and when we made that high, we had two big down days. On the third day, it put in a swing day style day, and then it was followed by up days. Boom, boom, boom. Then I said, that's interesting. Well, what happened here? We rallied up after that, put in a high, and then had two big down days followed by a swing day style day, and then some up days followed. And then I noticed again, we made a high, came down and had two big down days, and a swing day style day was put in. And then it rallied from there. And here we are today. Wednesday, Thursday, boom, boom, 2 big down days. Friday puts in the swing day. We should get this and this Monday and Tuesday this week. Even though we're under the flag, this should get us back into the flag a little bit. And if we fell by Wednesday, back down we go. And that would make sense. Once you hit this bear flag line again, you'll hit it and you'll come back down. So that's what I think is going on here. Inside of the bear flag has this wonderful repetitive pattern. Every time you see that swing day style low, you get about 2 days that follow. This is what we had on Friday. We're opening up Sunday night. I say if you're all going to short it, you let it come down a little, take your profit, and then watch for the upside Monday, Tuesday. Here's the beauty of this. You're going to short it first. If the repetitive pattern doesn't work, bingo, nice trade. You're going to short it first. If it backs off, you take the first 8-10 points and get out of the market's way. You're going to short it first, and the stop is not really big on this style trade. What else happens? If the market does move higher, we're going to let it move higher for a couple of days. Maybe we can buy it Monday and midday and into Tuesday. Then we're going to look for more downside. So that's why I showed you first the red Omni and then the green. I think we rally up a little bit, you sell it, come down, take your profit, and then see if the repetitive pattern gives you 2 up days, Monday and Tuesday. Traders, while you're thinking about possibly buying, don't forget, we are below a huge bear flag, below many key averages. This is not bullish by any means. If that repetitive pattern works out, we'll go up for a day and a half maybe. We chose to not take the repetitive pattern and take the Omni short first. If in fact it doesn't work, then we'll start looking at the repetitive pattern. But for now, sell the first rally, see what happens, keep it a tight stop, and then look for some upside Monday into Tuesday. Traders, pull your own charts, do your own homework. Make sure you look for the flag and then see if you can spot that repetitive pattern that I just pointed out to you. It's right inside of the big bear flag. So, traders, you've seen the charts, and there is my technical argument for why we have a red Omni at first, and then watch out for the possible upside. That repetitive pattern that I showed you 4 times in the making. 5th one is already set up. So be careful out there. Now, I'm not trying to hedge and say it might go up or it might go down. The Omni came out and said sell the first rally. But we'll see what happens after that. If in fact that's not the thing to do, then this will take over for the day and we'll deal with it. So sell into it first and then look for some upside for the repetitive pattern. Traders, I like the idea of selling first because if it just cracks, you've sold into it. We are below a bear flag, right? You're not supposed to buy below a bear flag. So the selling makes sense. Below the bear flag makes sense. But the repetitive pattern is there. I can't deny it, and neither can you. I've shown it to you. So let's be careful tomorrow. Follow the Omni plan if you don't have a plan of your own. If you'd like to learn how to devise a plan of your own, read the charts, learn how to figure this stuff out, you should come on down to Omni Camp. I'm holding one this October, and it is very likely the last Omni Camp we'll be holding for some time, if ever again. So if you would like to join us for a 4-day training session live here in Vegas with me, come on down to my site, livewithoscar.com. Fill out the OmniCamp application by clicking the banner top right, and I will call you back and see if you qualify. Traders, early Sunday night, it's early in the week. Long way to go here. Make sure your stops are in. Make sure that you've checked the charts and see if you agree with this scenario. Absolutely go look for your repetitive pattern. If you can't see the bear flag, why don't you just hang up your trading shoes now? So I wouldn't even tell you to look for that. And I will see you at the site. Traders, always remember to keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Yeah, go guys, go. I like it. A nice strong one. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.